Stocks have been going up for the last 5 months consistently. Every month has been positive. And if you look at toward the end of 2022, since then, up until this point, it's been an up market. The sectors that have been leading the charge have been technology. Needless to say, it's just been a boom cycle for semiconductor companies, software companies that are involved with AI. The other sector that's doing great is communication services because Meta, Alphabet, Netflix, and others are in that sector and they've been performing great. Now, investing in stocks is not about just looking at what's been working for the last year and a half, and just buying more. I don't know if people do that. I'm sure some do, but that's pretty much like looking at the rear view mirror of your car when you really should be looking through the windshield and seeing what's up ahead. One of the things that I like to do is look at other sectors that maybe have been left behind or have a lot of good value that hasn't been unlocked. I've talked on my channel about small and mid cap stocks as an example. And there's a video on that particular type of stock that I think has a lot of potential in 2024 and 2025. I've also talked about healthcare stocks that were beaten down in 2023 and I think are going to go places. In this video, I'm going to look at industrial stocks. These are typically older names. They've been around in the market for a long time, and they tend to have lower PE ratios, higher profitability, higher free cash flow. They pay dividends, and it's a good place for me to put incremental capital into. Right now, my biggest sector that I have is technology, communication services, and it's great to see those stocks really fly up. I just don't expect that that's going to continue just endlessly. Not too long ago in 2022, we had a major correction in technology, communication services. The NASDAQ had a horrible year in 2022. So even these high flying sectors will correct. When is the correction coming? I don't know. I'm not a fortune teller. I just know that I want to diversify so that I can really invest my dollars in what's going to be a good buy for the next 2 years, not what was a good buy for the last 2 years. So, with that, let me go over industrials, the sector, the industries within that sector, and specifically a few stocks that I screened that look interesting. So, the industrial sector is doing well in 2024. In the last month, it's up 6.15%. Over the last 3 months, it's up 11.17%, which is very comparable to technology as well as communication services. It's within striking distance. And if you look at it historically, it's done quite well. So it's a good sector to take a look at and see, are there some stocks that are in that sector that might be worth investing in? So within the industrial sector, there's a long list of different industries from construction and engineering to industrial conglomerates, machinery, aerospace and defense, passenger airlines, ground transportation. And I sorted the industries by the best performing industry for the last month, which was construction and engineering. Industrial conglomerates is doing well. And these particular industries are ahead of the sector as a whole. The industries that are not keeping up with the sector include aerospace and defense, airlines, ground transportation. And ground transportation, UPS was down 7% today, which is interesting. So overall, just a broad array of different industries that you can choose from to look for stocks. So to get to a list of companies that I could glance at, take a look at, and see if I want to analyze further, I ran a stock screener. And what I'm focused in on is the industrial sector, obviously, because that's what this topic's about. I want to see free cash flow growth of 5% or higher, a forward P of less than 15. I want the balance sheet to have debt than less than 3 times EBITDA, a free cash flow yield of over 5%, and an earnings yield of over 3%. So that should get me a quality list or an interesting list of companies that I can look at a little closer. So I ran the list and voila, I got about 19 companies that fit that criteria. The number one company was Ryanair. And I took Ryanair, I took a flight on Ryanair in Europe. They're doing really well. It's just very profitable airline. But as I mentioned, airlines just are not popular right now. I already own United Airlines, so I'm not looking for an airline. But other examples in here are like the Timken Company, Terex, which they do heavy equipment and so forth. There's companies that do certain technologies, looks like security and protection services. And it's really an interesting list. Heister Yale and different companies there. So what I decided on was a kind of a shorter list of these, and that includes Timken, Torex, EnerSys, Resideo, Atmus. I want to take a closer look and see, can I go deeper into one of these and really take it through my process to consider buying some shares in one of these companies. So the Timken Company has had a pretty good year. Over 1 year, the stock is up 10.55%. The company pays a 1.53% dividend, a market cap of 6.16 billion, and revenue is 4.7 billion. So you're paying a little more than 1 times revenue for the company. They're profitable, and this company does well with cash flow. They have roughly over $300 million of free cash flow, and their cash flows are growing, grew 17.55% on the operating cash flow line. So that looks good. So the company looks good from a valuation perspective. When we look at a forecast, analysts are covering the company, and several analysts price it at around $100 of value per share. Some of them 85, which is right around the price it's at. And then the low point is 74. Most analysts are either hold or buy on the stocks, and there's one analyst that is a seller of the stock. Forward PE, they're expected to earn $6.10 per share going forward. And this stock, the stock price is $86. So that's a pretty good net income based on the company. This is a good company for me to take a look at closely and see if it's a good buy. Over the last 5 years, you can see that the stock really is gone up and down, but it's not too far off where it was in 2021. So this is going to be one that I put on my watch list, and I'm going to do a little more analysis on Timken. Terex Corporation's up 35% in 1 year, and that's really good performance out of an industrial stock. And over the last 5 years, I really like their chart because it has an upward trajectory. So the company's been doing really well. They pay a small dividend of 1%. You're buying the company at less than 1 times revenue, which is impressive. Their forward PE is 8.78, really low PE. Now, as a company growing, they are growing their sales. Looks like they grew 16% in 2023. 13% in 2022. So really good growth. That's probably why their stock price is really going places. They have good free cash flow. They have roughly about $370 million of free cash flow, and they grew their operating cash flow by 75% in the most recent year. So this one looks really good. Now, this stock's doing well already, so it might be difficult to get a good deal on this stock. You know, investors, the news is out on Terex. So I'm going to put this one on the back burner and not analyze it any further. EnerSys is a company that they store power, and they have devices that will store power, which is becoming more important these days. And their stock over the last 5 years is up only 37%. Over the last year, it's up about 13%. And it's doing okay. It's not keeping up with the S&P, but the company does pay 1% dividend. The market cap is right around the revenue of the company. Their forward PE is 11.28, very good. Is the company growing? They are growing their revenue. It looks like they grew about 10% in 2022 and 12% in 2021. So it's good to see growth from this company. And the cash flow, the company does provide free cash flow. Looks like they provide about $200 million of free cash flow per year. So this company looks interesting. I think I'm going to put this one on my watch list and do additional analysis on EnerSys. Resideo Technologies, the company's doing well. Their stock is up 30% in 1 year. And looking at the 5-year chart, it's only up 12%. So it's had a really nice run up recently. The company, you'd be basically paying, their revenue is twice their market cap, which is interesting. They don't pay a dividend. Their forward PE is 13.55. With regards to revenue growth, they didn't grow in 2023. They had a nice growth trend for 6 years, which looks good. And their cash flows look good, about $300 million of free cash. So they probably are very well valued. If you look at, if they can start growing, I could see the stock really taking off because you're paying basically 10 times free cash flow for the company. So this one's going to go on my list of companies to evaluate. So Atmus Filtration, they do filtration and pollution control. And the company's been doing well. For the past year, it's up 59%, doing really well. And this might be an industry where it's just going to be in demand because we have to clean water, clean certain things. Analysts have a strong buy on them with a price target right around the current stock price. The forward P is 14. Looking at their revenue growth, they have been growing, not tremendously, but they have been growing. So it's an interesting company. They cash flow at about $140 million of free cash flow per year. So it's good to see a company like this generate free cash flow. I think I'm going to put this one on my watch list and do some further analysis as well. I'm a value investor, and I like buying stocks when they're discounted. I like buying stocks 6 months, a year before they really take off. And industrials may have a diamond in the rough or two that I can invest in and then watch my money grow. It's important for me to look at sectors outside of technology, communication services, and the sectors that have been doing great. Because it's awesome to have a really nice return on my portfolio, but it's not about really looking at the rearview mirror for ideas. It's about looking at other sectors and see what they have to offer. See if there's some really good value propositions in stocks that offer just great growth, really good profitability and cash flow, which I believe would really, over the long haul, increase the stock price. Because as more investors find that company, it would really take off from a stock price perspective and grow the value of my investment. So that's how I'm going to approach industrials. I hope you found my video interesting, and I appreciate you watching.